Here we are on the live trading session video based on the 100k Traders Challenge account. Here we are on Brent oil, where we were supposed to enter here 83.49, but we missed it. Okay, you can see that over here on the account over here. We only got the euro yen trade, but the Brent oil has not been filled. Now, what have we actually learned from all of these trades over here and the missed trades on Brent oil? I'm going to be talking about this and more in this live trading session video. Hi traders, thank you for joining the Master the Markets team today in our live trading session video and supporting us in our mission to spread the truth of trading and help you achieve consistent trading performance. It is Stu Narpan here, founder of Master the Markets Elite Trades Conference and Traders Open Day. So here we are, traders, on this Brent oil trade. So what was the whole rationale behind it? This is all based on the open equity based strategy. Now, quickly, just to share with you, what are the 3 lessons that we have learned on missing this Brent oil trade, traders? Is that the first thing is, what happened is we had an entry order here, 83.49, but when the market opened, as you can see, the open over here, it gapped up, right? So the close was here, and this gapped up a little bit, right? And where was the gap in relation to here? Let me just show you. 83.49. The open was 83.69. Okay, so there was basically, if I got that right, it's a 20 cent. It's a 20 cent gap that you got over there. So of course, we said we don't want to get that 20 cent gap miss. So we put a limit order. That's what you're seeing over here on the Brent oil trade over here, right? So that we have put a buy limit for it to come down. The prices are a bit different because just of the different data feed prices that we are getting, but the rationale is the same, right? So over here is the same. It just gapped up. Now, you see, traders, when that happened, 3 things we then reflected on. Okay, first is that when you see this big boy in the morning just rocketing up and you start thinking, oh man, I missed that trade. Was there something that I missed, or I could do something different next time? Okay, rather than chasing after the trade, traders, this is very important. Just because you missed it doesn't mean that you just jump onto it wherever it is at 84.30, whatever it is, $1 away from your real entry point, and then you just jump in to get into the trade. No, you don't do that as a professional. So what you first do is ask yourself the question: was there something that I missed? I could do something different. I'm just looking at some of the notes that I've put over here as well that I should be sharing with you guys. Very important thing. Do not chase the trade. Okay, that's the first thing. So was there something I missed, or I could do something different next time? Then what we then did is, as a professional, we go back to our trading plan over here, right? And in our trading plan over here, traders, we have written that if there is a gap, what to do, right? And then over here, it tells you in terms of pips for currencies, in terms of ATR, what we should be actually looking at. So it's all well detailed out for us to know what to do in those situations. However, when we were placing that trade, we missed to look at the crib sheet, right? So I forgot about that rule altogether. So we missed it, and then I just put a limit order rather than just entering it on that price itself. For 0.1 ATR would be definitely 20 cents would come to that amount. Let me just quickly just check that. 0.1 ATR was about 17 cents. So 20 cents is still fine. Now, another thing that we also reflected on is, should we do 0.1 ATR more? Should it be 25 cents gap, 40 cents gap? How do we decide the number? The number is decided by you asking the question, will you be happy losing out $25 for winning $5,000? Okay. And then if that doesn't make sense, you say, hey, you know what? That doesn't make sense. It's okay. I can let go of $25, but I don't want to miss out on earning $5,000. The other way to look at it is look at the profit amount you're looking to make and do 100 of it or 200 of it. The number you got to find out for yourself to see how much are you willing to forego for the amount that you want to make. But the same thing got to be done for the risk side as well, right? And then the risk got to be adjusted accordingly so that just because you enter it later doesn't mean you're going to lose more. So that got to be standardized too. So all those things you have to reflect on. If you're not sure how to get the answers, always get in contact with your trading mentors, or you can always look at our videos what we have talked about. The second thing, so the first thing was, that we looked at was that, as I mentioned, right? So go back to the crib sheet, find out if something you missed or something you do different. Second thing was what we looked at, traders, was the cash versus the system reconciliation. What do I mean by it? In the London Trader Show recently, Stephen Goldstein, which was well talked about, he talked about this as well, right? The cash and system curve, where he called the behavioral gap, or Mark Douglas used to call it the profit gap, right? And over here, what we looking at basically, we're looking at what the system should have done. According to the system, we should have entered on the gap, take that 20% miss of that fill, and entered it, right? But however, on the cash, we shouldn't have actually taken that. On the cash, we actually missed the trade, didn't we? Yeah. So let me pull up those spreadsheets. Just give me a second or two. Let me pull this up. So in terms of the elite journal, so you see, we got a trading journal. As professionals, you need to keep one, which, as I mentioned, is for the system. What the system should have done if a robot were to execute it according to your rules that you have put down together, and then versus opposed to the cash, what actually happened. Over here is the cash journal, and then over here you then write down what you missed and whatever that you've taken according to the system. And then you compare the results and you see how your system curve is opposed to your cash curve. That's what you need to be checking and tracking. So we always do that in terms of reconciliation, okay, in terms of missed trades, how we are doing to track our performance and see what needs to be improved to make that gap tighter, or even the cash curve to supersede the system curve, okay? Now, then the third thing is, what the system and cash curve shouldn't do, traders, is if you saw that because of this Brent oil trade that you missed, your cash curve is lagging behind, what you shouldn't get into the habit of is to chase the market in the future trades from an agitated mind to fill this gap for the cash to overtake. No. What you really need to do is, first step, you just got to let go of whatever that has happened. Remember, when you say let go, there are three parts you need to understand. The past is history. This Brent oil trade is gone. Let it go. Right? Another opportunity will come. There's so many more trades that will come. Let it go. Don't chase it. So let go of the past. The future, when you place a trade in the moment, don't let this trade come and stop you or scar you or create fear in you or create greed in you. The future is a mystery, so let it go as well. So, what the real thing you should really be focusing on is the now moment, right? As of today, is there any trade opportunities? As of today, how can I execute better? This is the thing you got to do. Let go of the past. Stop thinking about the future. Past is history, future is a mystery. Get back into the now, right? That is the third thing that we have to understand. That also that every trade that you take is unique. Once you know that, as what Mark Douglas said, every trade is unique. It's got its own probabilities. Then you let go of the past and stop thinking about the future and come back into the now when you place that new trade. So traders, those are the three things that we really reflected on And based on that, then what we then did on the gap and all that, we put a limit order at a different price, understanding how much we're willing to let go at this price, 84.73. And then that's it. We let go at that point. Whether it fills us or not, that doesn't matter. And at certain criteria points, that would delete the order if it's not fulfilled within a certain number of days or when other events happen. So that is in a nutshell what we actually happened with the Brent oil trade. As a recap, the first thing you got to ask, the 3 lessons learned in the first lesson is that, was there something that I missed or should do something different, which is what we talked about. And you can ask this in your own trading as well. The second thing was we did cash versus system reconciliation, which then Mark Douglas calls it as a profit gap. And the third thing is get back in the now moment, okay? In the present moment, stop chasing the trades anymore, going towards the future, into making that gap getting closer, get back into the now. Those were the 3 things that we learned. You can use that also in your same strategies as well to improve yourself and also to be start trading in the zone. Okay, traders, I guess that's pretty much that. That's all from me on this video. And as I said, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.